All right, guys, this is Paul Singh, the Market Speculator with bullsonwallstreet.com. Weekly swing report here. Today, we're going to talk about a lot of stuff. And by the way, if you're hearing some stuff in the background, I'm at a family gathering while I'm recording this, but I think it'll be all right. We're going to talk about a lot of stuff. And usually in these weekly swings, I give you a few actionable setups. We talk a little about a sector or maybe the market, but we're going to go over a lot of stuff today because it's really important. And we're in this kind of period of upheaval after last week's what looked like it could have been a meltdown, especially with the political events that were going on that were kind of setting the market on fire to the downside. And if we see the cues here, you can see this big down move essentially wiping out a bunch of gains going back to early July. So that's been kind of the MO of the market here. It runs, and then we get a few days of fear and scariness. Has actually been going back to early 2016, but they're relatively quick, sometimes just a few days of down move, and then we pop back up. And that's exactly what happened today on Monday. We got the big move up that basically invalidated the down move. And we cleared the 9, you can see here, and I'm going to zoom in a little bit closer here. You can see we cleared the 9, cleared that Thursday down move, almost back up to where we were on Wednesday here. So everything looking really strong. We like this market. And I actually entered 3 positions. I'm going to go over that with you in a second here. Trade report members were alerted to those earlier today, intraday. But if there was one caveat in the market, actually we'll say 2. One is the volume pattern. I would have liked to seen this big move on heavier volume. We don't like when the big drops are on bigger volume than the big pops are. And that's what we're seeing right now. Now, it's summer months, so maybe we can discount that a little bit, but the down moves are in summer period too. So that's a little concerning. And 2, we don't know what's going to happen with outside political events where technically everything can look exactly the way it needs to. But if tonight something comes out that Korea did something, or we reacted in some way, or we've got the riots going on, or whatever it is, these kind of things are obviously impacting the market. So there are a couple of things we have to be a little bit careful with, and why on one of our positions we're going to talk about, I actually took a smaller position size just to protect myself a little bit. But overall, technically, this is looking fantastic after that ugly move. And I'm going to pull this out, and you can see basically going back to 2016, every time these drops have happened, they've led to big moves to the upside, and they almost seem insignificant now, but they were all very scary when they were happening. One of these was Brexit in here. I forgot what these others were, but buying opportunities, and through these periods, a lot of them have been my most profitable periods over the last few years, and we went aggressive again on this. So basically, if the market rebounds here, we are going to make some big money, and hopefully we can mitigate it to the downside if the market pulls back. But technically, everything is looking really good. So these were the key break levels that we were looking for to start adding positions. You can see SPY here, same thing. IWM is lagging a little bit, but the other 2 are looking fantastic. And then financials also looking really strong. I didn't add financials because I wanted to be more heavily weighted in those other areas, but financials looking really strong, as well as is military and defense, obviously with what's going on in the world. So everything is looking strong here. The commodities are lagging a little bit, but we don't need to pay attention to those right now. Now that the market is turning, essentially, if these levels break, especially if this gap doesn't hold here, that's where we start to pull out of our positions. And even if you aren't that familiar with VIX, you can see VIX popped, and usually when the pop is over, it goes back to sliding down, and then the market goes up. That's all you really need to know right now. But if this reversed, that would be a signal that fear is re-entering the market. We could get a down move. So that's what we're going to be watching very closely as we build positions here. One, do key levels on the indexes start to fall? And does VIX start to pop? If VIX starts to pop, we probably just get out of maybe at least a half our longs here. So keep an eye out on that. Now, the 3 positions I entered today, and again, report members were alerted to them. One was Tesla here, essentially a continuation move, handled the down move very good. You can't even tell that the market was looking like it was collapsing at this point. It looked like just a little pullback. We actually took profits in here on a nice trade, and we're back in now playing for at least a test of the high, maybe even a play through a breakout. It's off the 9 here. This is a trend continuation play. All three of these setups were different setups. NVIDIA, we entered today. This was a gap down reversal. Anytime these strong stocks like the FANG stocks, NVIDIA stocks gap down on earnings that seem like overreactions, I look for the overreaction gap reversal play to the long side. We got that today. And now we're going to watch for a break of the high. I'm not just playing it to the high. We're going to go for a break of the high and look for a bigger move. Essentially, the big gap down has been on earnings has been completely invalidated. This trade has worked really well for us in the FANG stocks as well. We did it with Amazon once. I think it was Google once. And Tesla have all worked really well. Okay, now VIX I alluded to here, but let's pull it up and just look at the history of this thing. So we can see if we pull this thing back, we get the spikes when it gets a little scary. And then when that spike is over, we see VIX dropping. And that was the trigger today for us. As you can see, the spike was over, it gapped down, for us to basically short VIX. And we did that not by directly shorting VIX, UVXY, which can be a better play because you have price decay if you're holding it longer. Those of you who know a lot about triple leverage ETFs know about that. But we went with going long SVXY, and you can see it like VIX was going down. XVXY is the inverse. It essentially lets you go long, but you're shorting the index that way by going long. So if you feel more comfortable going the long side, gapped up here, we entered towards the end of the day, but still got a nice around 80 cents here. And now we're going to play essentially entry at 80. Stop will be down in here. Give it a little room to pull back, and then we'll play it for a quick pop to 90, maybe even 100. 2 to 1, 3 to 1 on this trade. And this thing can pop very quickly if the market starts to recover. It'll essentially move like the market is moving. At least that's the plan. So that was the VIX setup here. I think it's still available to you if you're looking to play it, as long as it doesn't pop too much tomorrow. VIX to the downside, SVXU to the upside. Hopefully that wasn't too confusing there, but re-listen to it a few times and I think you'll get it if you're new to this. All right. What stocks are we looking for in this environment? I want you guys to focus on financials, and you can just use the ETF because most financial stocks are not going to beat the triple leveraged ETF. So essentially a trend continuation. We got the pullback and now it's continuing. So financials look really strong. Obviously TQQ or the Qs look really strong. So you could just directly trade the Q index, which actually beat most of the tech stocks at almost 4%. And if you look at the FANG stocks, I don't think any of them were at 4%. Or you can go with the FANG stocks. I am in Facebook right now, and we got the nice bounce here, 1.5%. The other area you want to be looking at is solars. And I am in FSLR right now, and we got the nice bounce today. We're going to play through the high breakout. This sector has been so strong. And then another solar is SEDG. I'm giving you a lot of stocks from our focus list today. And then BA for military defense. Obviously, that's doing really good in this environment. Has been doing really good, strong, almost 100%, maybe even more than 100% since the election. So BA, military, really strong area to be watching. The stocks I just entered, look at semiconductors in terms of sectors, financials, semiconductors. Trucking has surprisingly been really well, and retail has surprisingly been picking up. So there you have it, everything you really need to know for this market, especially if you're a part-time trader. Everything we talked about here, just focus on that. Forget about everything else in the market right now. So know the key index levels. Watch for the market faking out and continuing down, and we have those key signals we talked about. You have the 3 positions that I'm in right now. Understand VIX and how to trade it if you want to do that, and look at these key sectors and stocks to trade for the upcoming week or two here. All right, guys, so that's it for the weekly swing report. I'll see you guys next week. I'll be putting out some more blog posts. If you didn't catch the webinar where we went over the results last week, it was a really good webinar, talked about a lot of different stuff, handling drawdowns, the results, being a professional trader, risk reward, huge Q&A. and trends coming up, which we've kind of talked about today as well. So any questions at all, email me, singjd1@aol.com, and of course, Bulls on Wall Street.